important two things is there. Now I start my recording with voice and with this important noise voice message. We can see this is downtrend, higher, lower, high, low, high, low, lower, high, lower, low, lower, high, lower, low, IDM, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. But this is a actually this you can see on the ball, and this is a previous day liquidity sweeps is there. That's why the market is definitely probleming from this level. Previous day low liquidity dollar, previous day liquidity dollar, previous day low liquidity dollar. That's why the market is gaining the strength. And this is a previous day high liquidity dollar, previous day high liquidity dollar, previous day high and previous day low. This is a previous day high. You can see, this is clearly see, this is a previous day liquidity and this is a previous day low liquidity. And the market the sweep this previous day low liquidity again, then you can directly see they sweep the previous day low liquidity. And demand is supply, demand is respected and demand is respected here, and supply is failure and demand is respected, and he created void. You can see in the also chart, and we will go to the chart directions. Let's see again. Yes, this is don't forget also understand the price action, because the price action also important in the candlesticks, because it's important, and the basics understanding of the charts and how to understand the chart. You can see, this is clearly see, this is a head and shoulder pattern is creating the creating by the chart. Again I can I am right of draw the sketch of the head and shoulder patterns. Firstly, this is actually this is swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, and also break this structure and again come downside direction. You can see this real structure is a come that side directions. third third high is greater than first right and left shoulder, first right and left shoulder, first right and left shoulder. This is a left, right and left shoulder. You can see this is same image is there. It's we consider as also breaker blocks is there. Most probability of the head and shoulder, if the someone retarded using the price actions, hidden price actions in that, they probably use the price actions and they use as a head and shoulder patterns. That's why. But if someone using the ICT or the smart money concept, they use as a breaker blocks and mitigation blocks, I think. Yes, yes. And now we will use this. Okay, now we'll understand how in this is a 15-second time frames, and this is a key point, this is a key point, again this is key point. One high, second left shoulder, right shoulder, right shoulder, 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 right shoulder. Yes, you can see this is clearly now with the red spots, high, low, left side and right side shoulder. That means you can understand the right things inside about it, because we will know how the price actions work in the market. Because of there have the some not have probability, because if you understand the all total price actions or the simple psychology behind the charts, because in that every transactions need a buyer or sellers. Without any buyer we don't sell the any product to others, because that's why the every selling and buying require the two parties, first buyer and the second one seller. Someone accepted to the buy give products, and the someone exchange the products. That is exchanging the part in the firstly we can see in the previous or the ancient history, don't have the monies to exchange, uh, but they have the exchange some things like goods, grains. They transfer the grain from the one person to the another person, and they also exchange to the other things, to the require the things, such as European country transfer the some product to the India, and the India transfer the some product to the European country. That is the exchange material from this. So that's why uh, every buyer require the seller, and the every seller require the buyer. This is a continuous battle of the buyer and exchange of the buy and sell, buy and sell. That's why we understand the psychology behind this idea, and consider the definitions of the um, share markets or the every financial market, because the every financial market understand based on this all types. Expect OTC market, because the over counter trends is a OTC market is driven by the only algorithms. There are the some problems, but that is also have some importance aspect are the everyday noticing the chart is same. If someone have experience in the chart trading, that's a great things for that person, and they also earning the money from that. Nobody they're asking the anyone. Now you can see this. I Yes, now you can see this is chart. Now I'm transferring this ball to the same direction, then we can see this. This is a head and shoulder patterns. What's called as this is a head and shoulder patterns. Head and shoulder patterns. Head and shoulder. Why called this head and shoulder? You understand the head and shoulder, human body head and shoulder. You everyone have a head and shoulder or the human in every human body. Now I draw the head and shoulder patterns. Our body, human body is there. You can see the clearly see the thing. Don't worry. This is some troubling issue is there. Now I fix it. Don't worry. I will do that better. Yes. I use my personal networks there, and now is running smooth, I think. By the way, you can see this head and shoulder patterns is there created by ये भूत लगती है महीने ना. You can see this is a head and shoulder patterns created by the, and also, but if someone have experienced persons in that in the trade this side, because of he firstly grab the high liquidity, high he grab the firstly he take the high liquidity. This model he take the high liquidity. Firstly he take the high liquidity, created first high in that, and then sweep it again in sweep it, and that's when that is the understanding of that. and and from this level to this level, don't break the law of the candles, any candles, don't break the law of any candles. That's why the market is understanding the how it work. But here in the 1 minute, don't break the any law of the downside candle. But here this is a 50-second candle, he break the law of this candle. But and now we trade, because this is our context area, because we understand this is a previous day low liquid, previous high swing high liquidity grab from this level to this level, liquidity grab from this level. This is a liquidity trap from this level. Now I add some dollar sign is there, and okay, dollar sign is there, and increase the size of this. Yes, now this is okay. This is grab the low liquidity high, and then in downside direction. This is our stop loss. This is our stop loss actually. This 50, 20, 30, 20, 30 points, and we target a downside direction from this level. And our target is mostly, this is our stop loss above the, slightly above the swing high, and our this is also breakdown, this is also breakdown of, and this is also secondary also breakdown, breakdown of the trend line. And the target of our target is a high liquidity sweeps, again the low side liquidity sweeps from this level. This cow dum dum. Now this is a trade size, this is a 9 is to 47 trade risk reward trade. You can see this is how is work, this idea and this understanding of it. You can see, you can clearly see this, how where is work and how is work market. He take the low all downside direction with this, and he this is gap between the high previous day low and the opening high, previous day close and the opening candle between the high. This mostly about how much is it? This is 30 rupees candle most, and we consider this is almost grab the everything is the downside direction, and this is also liquidity in the downside. He grabbed the firstly powerful liquidity and again go the upward directions. You can see this graph, the first liquidity is there, this equal high equal low. If idea, if from this leg have a number of stop losses is available, from in this leg number of stop loss is available. If the number of stop loss is available in this leg, number of stop loss in this leg number of stop loss is available in eyes, and and the market go the opposite directions from then, but that times the market don't give the any chance to stop, take a profit. This you can see, this is don't give the any chance, and this all the stop loss is collected of the mostly don't is 100 and 180 points, 180 points captured, and he take the all stop losses. Firstly he trap the peoples, he trap the traders, he firstly trap trader here, he trap here, also trap, this is trapping, game trapping. This is created a uh, 3 candles, this is resistance, even due to the some impatience trader use this as resistance level. No, this is working, but when working, where working, the somehow the hide and clue, because we require the some background supports or the strong data behind that reasons. If this is a strong liquidity graph firstly, and they take the um, he grabbed the strong downside directions liquidity about 1 month at time, and then this creating the support level. Then he definitely go the upward direction to grab the that month high liquidity. This mm, firstly market go the upward directions, he grab the also liquidity, and again go the downside directions, and you can see this is also equal high, some rejection from this level, high low, he grab the liquidity. You can understand everything. If he grab the liquidity, he grab the stop losses, and boom, this is downside direction, this is downside direction, he come down, he go the downside direction from this level, downside directions, and he also mm, go upward direction from this level, strong straight, strong straight. Sometimes price action is also have the important, but in that place, because the price action algorithm is trained by the trapping the price action traders, because they take the almost too much retail trader is using the price actions to the everyday. That's why the trapping is easy to the that traders, or they take the stop losses and the stop everything's, and he become the liquidity in the markets. That's why it's important. Sometimes trend lines, price actions of everything, support, resistance, um, breakout, breakdowns, the yeah, I think this is working the sometime you can, this is a live example of this working area. This is a partially market come from the downside directions, come from the downside direction. He tap this POI and pair value gaps, and again go the downside direction. He created 50 seconds time frame in the head and shoulder pattern. You can see firstly here in the peak time frame he created also head and shoulder here, head and shoulder, head and shoulder, and also his hair, the head and shoulder in the small time frame also he created. That's mean we consider the every big candles if have 1 month candle, they created head and shoulder patterns. If we go the lower and lower time frame in that 1 month candle, they he's also created the head and shoulder pattern in the lower time frame. That means we understand the every smaller unit is replications of the bigger units. Yeah, and if the someone experienced traders the trade here, because he swing failure is there and the market go there, boom, direction from this level. If the he broke the market, if the this is broke, then the stop loss of 16 point and the target most about the upward directions, most about the upward directions there. Again the market come from this is creating also liquidity. Firstly he created stop losses there, the retail trader or the any other trader don't understand too much of the market, they trapped here in the downside directions, he trapped here in the downside directions, higher high, higher low, he creating the stop losses, here is a stop loss of the this paper is buy from this level, stop losses, and they thinks the market is going the above and above, again above and above, but they don't understand how it work the market, and how trap the people from the stop losses, and they take their money from the without knowing this person, without knowing that person. The share market um, is a game of stolen money without knowing us. This most important thing is this, stole the money without knowing us, we pay the money to other, this is a game. That's why, and this is and this take all liquidity, all the above directions, he take the all liquidity. You can understand if he created, he secure, if he secure the downside directions, if if this candle is secure the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Yes, you can understand. Now this is a strong upward direction trend, upward direction trend. Yeah, you can see this strong upward direction trend. Yes, I will transfer this area to this area, downside behind this, and this is also, you can, this is a strong upward direction trend is there, upward direction trend, and he created a higher low with a trend line support, higher high, higher low, trend line support, trend line support, higher high, low, trend line support, and he broke the, this is a higher high, high, higher high, higher high, this is higher low. This is higher low, you can see this is higher high and higher low, higher high, higher low, but these sides have a number of liquidities there, downside directions have a number of liquidities there, this have strong liquidity, stop losses, stop losses, stop losses, stop losses is there, downside directions of that, stop loss, stop loss, stop loss. That's mean the market take the upward direction stop loss, upward direction stop loss, but he don't take the downside direction stop loss, he take the upward direction stop loss and downtrend, and don't take the downside stop loss, but but every retail trader is going the institutional trader or the who driven the market, that's direction. But now understand, now institutional understand, uh, we don't take a profits and we don't have a too much too much buy quantity, but that's time he trap the peoples from the downside directions, he take the all liquidity, he firstly take this high swing failure, this swing failure, again swing failure, and again downside, don't underestimate the idea of that, and he take the all stop losses and again go the full directions of the market. That's why how market is working is there, you can see this is how market is working, this is the real game of the markets, and here is also happen like this is also happen like this, and he take the all liquidity is there up to this level, means all stop losses is created games, and the market again go the downside directions again, not worry, don't tensions, and he fill the all league orders of the big players, and he go the that directions, if someone going the right directions, but institutional want to going the left directions, firstly institution go the left directions, uh, right direction to trap or the confuse the peoples, and again go into the real direction, that means that this is the real traders. And I think you can also, I share the some liquidity example, yeah, this is whale, this whale, this called as whale. In the well, the water is important, because the water is the most important thing is there, this is water, in this red color, this is water, yeah, you can see this is water. How liquidity is work in the market, yes, in the simple example I will understand how liquidity work. This water is called as, water is called as liquidity, water is called as liquidity, yeah, Water is called as liquidity. Water is called as liquidity is there. Yeah, you can understand liquidity. Liquidity is the most important thing part ever in the market. Yes, and this well is called as liquidity store. Liquidity store. This is well is liquidity store. Liquidity store is there. In the summer seasons, in the water of that well is draining or the end, but the villagers run the tankers in their village to drop the water inside the well and provide water to villagers. Understand? That means the villager provide liquidity to the villagers. Liquidity provided. Liquidity means liquid means money. Money is provided by the someone's. This is also strong example, but I am also understand in the simple word. If if you can understand, if someone is selling the idea, if the someone selling something, yeah, this. This is one seller or buyer. Yeah, this is buyer. This is one the buyer or seller. He want to buy the some apple. He want to buy some apple is there, and he buy the 100 apple. he buy he want to buy the 100 apple. He want to buy the 100 apple. 100 apple. Hmm. But he want to buy the 100 apple. He want to buy the 100 apple, but someone want to buy a someone want to someone want to buy a 1 lakh 1 crore quantities. And this seller have only 5,000. This seller have only 1,000. This seller have only 1,000. 1,000 apple. 1,000 apple. This seller have only 1,000 apple. But like this 1,000 apples, it have a number of persons is there. number of persons 1000s, 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 1000s. Some have bigger, some have bigger, some have slower, but have someone have a different amount of the apples is available in the market. But this person is selling from that, this person is buying from that, this 1000 apple only, this is available that times. That's why available that time. But this man is able to buy the 100 apple from this this man is able to buy the 100 apple from this man is able to buy the 100 apple from this. Yeah, you can see, this buy the 100 apple from the, but this he want to 10,000 apples, 10,000 apple. mm, this is one 10,000 apple, this is a 10,000 apple. He don't buy the 10,000 apple from that person, because he only get a 900 apples, but he want to buy the immediately apple. That's why this person is going to this market, and he bargaining with them, I am buying your apples, I am buying your apple with a rate of 500 rupees, and he selling the 1000 rupees apples. Yeah, he buy the all these liquidities there, he buy the all liquidities there, he buy the all liquidity stock, he buy the all apple, he buy the all apples, and come and he buy the all apple is there, he buy all apples, he $10,000 buy, and he get a 10,000, and now he going to the now he going now he going to that another seller, he buying the 10,000, and he sell that 10,000 to the 1 lakh seller, and he take the profits, he take the he take the 20,000, he take the profits with 20,000, with selling some profit some loss, with the trapping the peoples, and bargaining with them. This is game of the buyer and seller in the markets, you can understand everything is about that. This is simple game of this. Now thank you so much, and we will see the again in the market, and this is also understand the something idea. Okay, thank you so much.